Okay, all right. Well, most of the global markets are trading in the green, but let's get stock specific and let's get fundamental analysis going. Nishal Maheshwari, CEO Institutional Equity and Advisory at Centrum Broking, joins us to talk about a whole host of stocks. Hi, Nishal. Good morning. Well, the big cue this morning is that crude oil prices are down, and from an India perspective, well, that's something that we like. But what about sectors? You know, OMCs, there's marketing margins were negative. Now they're moving into the positive trade. Your view on oil marketing companies from here on, given that crude prices are quite weak?
Morning, Nigel. So, yeah, I think basically crude seems to be coming off, and I think that's more to do basically with the outlook, which most of us are now projecting, saying that there is going to be recession in a few large consuming economies of the world in the next year, and I think it's manifesting that. The industry, OMCs itself basically are going to be beneficiaries of that. Historically, we've seen basically that it is difficult in a democracy to keep on taking price rises whenever prices go up, and some part of the losses have to be absorbed. But a falling crude price basically is definitely going to be positive for the oil marketing companies. Again, I think India being more diesel, and most of the Indian refiners are heavy on diesel. So I think these guys are going to make a good amount of money. So we are positive on the oil marketing companies.
Do you have a preference from the three of them?
So we like BPCL, HPCL and IOC in that order.
Okay, BPCL, HPCL and IOC. What are your thoughts on Bajaj Finance and the update that came through? The AUM growth is actually moderating. It's still very strong, but there is some moderation in growth. Any thoughts here?
Morning, Sonia. So what's happening basically in the finance market is basically banks are coming back very, very strongly. So a couple of years, 2 or 3 years of very strong growth of Bajaj Finance was on the back basically that most of the banks were out of the market due to their own problem. So I think NBFCs are facing a challenge from the banks. Banks have definitely a bigger reach, and that's what is manifesting in Bajaj Finance basically at the moment.
Okay. Nishal, we want you to participate in this conversation, and we have another guest for this, because the big announcement that came from the central government yesterday is that it has approved the National Green Hydrogen Mission, and the initial outlay is quite big at 19,700 crore rupees. The mission is targeting investments worth 8 lakh crore, coming from the private sector, and hydrogen production capacity of 5 million metric tons by 2030. We are also joined by Jal Irani, the Executive Director, Nuvama Institutional Equities. Jal, thank you very much for joining in. I'm going to start ulta. First, from what the market should focus on. Would you focus on companies like SJVN, you know, the usual renewable power companies? Would you concentrate on Reliance and the Adani Green companies who are already big in this? From a market perspective, where should we look?
See, the whole new energy opportunity globally itself is at a nascent stage, but potentially humongous. And as we have been now saying several times in the past, India has got the opportunity to become the new energy sort of Middle East of the world. So essentially, I would recommend to focus on the big picture, which is you know, how the building blocks are being put into place, and you know, why. So the incentives which are being rolled out, whether it's a 20,000 crore green hydrogen mission incentive, or the PLIs in the advanced battery stage, or the solar module PLI, which was already rolled out, is really a function of that India could be very competitive in the space, given its what we call sun and sand advantage, along with the you know, EPC cost, which is half that of even China. So I'd really say top down is the big opportunity to focus on at a relatively an early part of the industry this, and companies are, of course, positioning themselves, but it's a rapidly moving jigsaw puzzle.
Okay.
Okay. Jal, good morning. Due to paucity of time, just wanted to check with you on the potential beneficiaries of this move from a listed standpoint, and who could the indirect beneficiaries be?
Okay, look, we are not going to be talking, at least I'm not going to be talking stocks on this particular this. So I'll leave that to you to judge.
Okay. All right, Jal, but could you give us a sense about when do you see execution taking place? Now, CAPEX has already been announced, but is the supply chain in place? What's your sense in that?
So, see, again, green hydrogen is part of a much larger chain, and 2/3 the cost of green hydrogen is renewable energy. So the capex spends in the renewable energy space as a key building block has already started with a vengeance. So if you look at the various renewable energy companies, they are almost exclusively setting up only renewable power capacities incrementally. If you look at similarly globally, 60% of all new power capacities are actually in the renewable energy space, and in fact, it's forecast that by 2030, 80% of all incremental capacities will be in the renewable energy space. So it depends on what part of the chain you're talking about. Green hydrogen is sort of midstream to more downstream. So the first part, whether it is solar modules, then solar power, then EPC, all that has already started with a vengeance. Then it filters in now as the rest of the building blocks are being put into place, whether it is green hydrogen, advanced batteries, that's sort of more midstream. Further downstream, and also remember, also to put things into perspective, hydrogen, which is produced from gas or coal today, India is already amongst the largest producers and consumers of grey hydrogen. It's the refineries and chemicals, refineries mainly, which do that. So there is already production of that, and therefore there is a switch which is happening straight away, and that itself, that switch of 5 million tons which is being produced will be an additional renewable energy capacity increase of 115 gigawatts on top of the 350 odd gigawatts, 340 odd gigawatts, which has been targeted by 2030. So the upstream part has already started happening with a vengeance.
Okay. Well, Jal, it's the analogy is very interesting. You are saying that India will be for green hydrogen what the Middle East was for fossil fuels. That's very mouth-watering. By when do you think it fructifies? Does it take all the way up to 2030, or we can see that those things happen earlier?
Well, it's too early for that to happen. See, today the cost of green hydrogen in India is about $4 to $5 a kg. And across the world, it varies. It ranges from at the most cheapest is $2 at the extreme, or $2.50 at the cheapest, to even $10. Now, India's target is to bring down the cost of green hydrogen from $4 or $5 to $1 by 2030. We have done deep analysis, and we feel that $1 by 2030 may be a bit of a stretch, but 1.5 is easily achievable. Now, at 1.5, you've got the potential of being the cheapest in the world in any case, and beyond that, the cost will fall. So, immediate term, I would focus on which industries benefit from green hydrogen, but you need all these incentives and various costs to decline to make it very competitive. So it's a few years away, basically.
Okay, all right, Jal, thank you for stopping by and speaking to us about the green hydrogen mission. Nishchal, before we end this discussion, any thoughts from your end on who the potential beneficiaries could be?
So, shortly, I think Jal is an expert there. Basically, he's tracked that sector for 2 decades. So, but what I see, there are a couple of announcements which I can only see. Basically, one is obviously the Adani Group and Reliance. they are the big guys basically who are anyway big on the renewable space, and they have announced big investments in that. So we have to see with which company within the Adani Group, and obviously Reliance is the one company. So I think Reliance and Adani Group are the two who will be the beneficiaries there.
Okay. Okay, Nishant, now let's move away from renewable and energy to this stock analysis. Other than Bajaj Finance, the fairly decent number that has hit the exchange list is that of RBL. I mean, RBL was a near broken bank 2 years ago, and this looks like an early turnaround. They've done extremely well on current and savings account. I mean, there were times when people were pulling out deposits, and now they're actually able to attract savings accounts and current accounts. Do you think that stock deserves, merits a look?
Definitely, Lata. I think, as I was saying, I think most of the banks, not most, I think almost all of them have actually get their act together. They have cleaned up their balance sheets. I think most of them have been able to raise capital also. I'm not, don't remember about RBL, but possibly if not, then they will also be able to, because the market is at the moment positive towards the whole banking sector.
Yeah.
And I just see the cycle starting. Actually, for the whole, if you remember from ILFS time, it's been almost 5 years that the whole banking sector, the NBFC sector, all of them have been down. So this is just the starting of the cycle. So I am very favorable towards all banks, especially the smaller ones, because they have a bigger growth potential to go for.
Okay, well, thanks for that. We'll continue talking about stocks, but we need to take a break. On the other side of